For those that are interested in the oil market, it was a tumultuous 2020. What about 2021? Let's catch up now with Malcolm Granwood from melkysblog.com. Malky, good to talk to you. You regularly put together bucket lists, and I know at the back end of 2020, you compiled a 2021 bucket list. Before we get into the numbers, just explain where we are in terms of the oil market.
Well, I mean, as you know, we had the big fall in April, May of last year, which coincided, ironically, with the virus and the pandemic, but had started with the little bust up between the Russians and the Saudis when they started going for market share. So the oil price came down from 60 to 25. In itself, that meant that oil companies' prices were slashed, their budgets were cut. They cut their capex significantly during the year, and of course that means that by the end of the year, the existing bucket list just needed to be ripped up and started again, really, because I needed to give investors a sort of pathway to being able to invest in the sector, being able to pick and choose between, risk and no risk and reward from yield or capital gains and so on. So I restructured the bucket list in its entirety, and also on the back of the fact that, as an interview I did with one of your colleagues the other day, is that I was sort of, I wouldn't say ahead of the game, but back in December I thought that the numbers for this year were looking that much more positive. And when I say that, I mean, what is now being called the vaccine play, in the sense that when you start getting the vaccinations out, and they move very quickly throughout the year, demand in these key economies will start to pick up. And what is more, they'll pick up very quickly and more quickly than people expected. And we've already seen that in China, where demand for oil was actually significantly up in the last quarter, and GDP will be up this year. I see the IMF have gone to 8.5%.
Yeah.
So it's if you don't get in soon enough, it'll have happened already.
Yeah. Well, let's take a look at what the list looks like. I wanted to break it up into several areas. First of all, the UK. You've got 4 stocks here on the UK list. Let's just quickly break these down. And what's the message about what's happening in the UK about oil stocks?
The message here is twofold. Firstly, a significant degree of exposure to gas, because whatever people say, and onshore or offshore or whatever, this country is using more and more gas and will need to import more and more gas. So whether you're Serica up in the north of Scotland, whether you're IOG in the southern North Sea, or whether you're Union Jack on the onshore, they're going to find a lot of gas, and they're going to sell it at ever increasing prices, and they're going to do very well. And if you add to that Jersey Oil and Gas, who have built up almost by stealth a magnificent position in what used to be called the Buchan Field, is now the Greater Buchan area, or the hub of Buchan, as I call it. And they've got themselves in a position where they've got this fantastic amount of hydrocarbons there, and they will be farming that out in the next few months. So we've got a situation here where, I think these 4 companies will cover that area very well indeed. They've all got, very good quality management, and they've all got strong finances. They're all financed through the year. They don't need to come to the market for money. I think that there are 1 or 2 of them where, the market has completely missed the boat. Union Jack, for example, onshore, where they announced yesterday the potential upside from the West Newton field, where Rehobold are also in. It doesn't almost need testing. It's that good. And so, I see very decent upside from all these 4 companies.
Let's move on to the international companies. I've broken this down into 2 areas, 2 blocks of 4 companies, just to give us a nice, easy to talk about bite. What about the international part of the list?
Well, as it's always the case in oil and gas, you know, the companies travel all over the world in order to find oil and gas, and now that the oil price is comfortably above $50 a barrel, they're being rewarded for it as well. The Jadestone is at the top of the list there. You put that there, but it's no reason why not. It's probably the most outstanding management in the sector, where they've got some very, very decent acreage, pretty much all in Southeast Asia there, from New Zealand, Australia, you know, and Indonesia. But they've got fantastic acreage. They managed to, I mean, they're so flexible, this management, that last year when things went badly, they managed to put on the back burner 1 or 2 projects which will now come forward. They've cut costs, so have they all, but CapEx was down to an absolute minimum last year. So, you know, Jadestone will always be coming straight back to the market. And I think there are 1 or 2 others there where, you know, sophisticated investors will realize. Petroleum had a very difficult year last year, and that was a combination of, you know, the oil price. They were locked into a very difficult situation with the oil price, where they didn't get paid, rewarded for several months until the oil got to the marketplace. That's been changed, and of course, you know, they produce oil from the Britannia field, so Bretana, I think, field in Peru, and of course they had some domestic problems with the pandemic, so, you know, they were hit very hard. I think that Petroleum has got, again, great management. Manolo, who runs it, is a perfect man for the area. He's been there forever. He knows it inside out. It's well supported by its shareholders. They had a raise a little while ago, and a very strong position. And elsewhere in this little group, you've got Touchstone, who everything they touch turns to oil or gas or both. They're in Trinidad. I've liked these guys for a long time. The reason for that was when I first went in to see them some years ago, they were pointing out that they were going for some of the bigger plays in Trinidad, in the Ortois block, which had been drilled before many years ago, but it did look like there was potential, reasonably low risk, high reward hydrocarbons, and they've come in 4 or 5 wells, one after the other. My worry 2 or 3 years ago was that they had expensive financing. Of course, you know, with the oil coming in, they've managed to completely change that. They're now fully refinanced in a strong position. And there's still masses and masses of upside from the current price for Touchstone.
So you're not saying that we've already built in all the future advantage that Touchstone's got. Are you happy about shares still got upside to go?
Well, masses, yeah, because, you know, what you've seen there on what is obviously a massive, great chart, but they, you know, if you divide that into 3 or 4 segments whenever they've made a discovery, that is only at or below the level they would have been before. You know, they've got so much more to come from discoveries that they've already made in the last year or so.
Let's move on, if we can, to Savannah. Just switch the chart onto Savannah. Very different sort of feel to the company, but it says here the biggest and most reliable power supplier in Nigeria. We know that Africa is finding it very difficult to get continuity of power, so clearly this is a good area. What about Savannah?
Well, Savannah's has been missed out a bit because they've made this 7 energy acquisition in Nigeria some years ago, but it has taken longer than anyone thought to come through. But it is now coming through. And as you know, Nigeria is the biggest economy in Africa. It is, you know, massively dependent on power, as with again, you mentioned, with most African countries, they find themselves in a position where historically they've used anything but the indigenous gas they have to make power. Everything's from petrol, diesel, you know, you name it, or expensive oil. And they've got a lot of gas. So what we've done here is found that Andrew Knott and his team at Savannah have bought into some huge oil and gas fields, and they are supplying gas to generating plants. And as you said, they're now supplying over 10% of Nigeria's power needs from their own gas, and that can only go up. And these are on contracts which go for 20 years or with take or pay contracts, and so they've got absolutely committed earnings, probably through till 2036, 2038, and which can only grow. As people want more gas, they take more. So very strong position.
In your bucket list, there are a number of international companies. I think we've got another list here: Predator, Sirocco, Chariot. What's your pick there? What's the message about this group?
Well, President is just seriously undervalued. It's got a great performance in Argentina, and it got hit hard by the people who were concerned about the macroeconomic risk a couple of years ago. You saw the fall, the presidential elections, and the shares never recovered. But actually, the work that Peter Levine and his team are doing out there means that they're producing more and more oil and gas. They're about 50-50 oil and gas out there. The oil price is subsidized over there, so they get it. Whatever happens, they're continuing to drill. The market just has not taken any notice of this whatsoever. They've even got one or two substantial investors have come in. I just think there's a lot of upside in this one.
Moving on, Predator, Sirocco, Chariot.
Predator is very strong because it's got the CO2 enhanced oil recovery position in Trinidad. In a sentence, it is going to be known for being able to produce oil with massively reduced carbon exposure, and therefore this is a green stock to watch out for. And they've got the potential for a huge discovery in Morocco. In fact, they've got the acreage. They're ready to drill. As soon as the pandemic dies down a bit, they'll be drilling there. So a very exciting one for this year. I think I saw Sirocco there. Sirocco, also Africa and Tanzania. I changed out Aminex, which have been there for a long time, for Sirocco, because Aminex are now, they've done the farm out, they're fully funded. But Sirocco, I think, because you remember it used to be Solo. They've also got 25% of Rovuma. It's not carried, it's not farmed out. So they've got that potentially to sell. They've got very, very high quality management. Ferguson is absolutely top quality, as are the rest of the team who work with Genel Energy. And I expect to see more from Sirocco this year. And Chariot, which had a fantastic year last year, they bought into this Lexus license, which has now become the Risana overall license because it includes other things on top of it. And Lexus with the Antwerp gas discovery will feed onshore the gas into Morocco. Morocco is probably one of the best, if not the best, countries in the world in order to trade in, apart from the fact that, as you say, like other African countries, they're seriously power short. They buy in gas, and so they need all the gas they can find. And they've done fiscal measures that make your eyes water. 10 years worth of tax-free production. Morocco is the place to be.
When we've spoken before about your bucket list, quite often you remind us that, in fact, things go up as well as down, and they can go against you. So obviously anybody taking a position has to bear in mind that there's a little bit of, I think in your words, sex and violence, I think you've described it for in some of these companies. But I want to push you, if I can, on some of these companies that are delivering yield, because it is possible to get a yield play, isn't it?
Yeah, I mean, unusually in exploration companies, you can get a yield because in the old days, the only way to get yield in the oil and gas sector was to buy the majors, BP and Shell, obviously. But nowadays, one or two of these players are doing very well indeed, and they're in businesses where they're throwing off cash and where they don't necessarily feel they can do any better than the market. And they are literally part of their process, their funding structure. They're paying back dividends to shareholders, and and they do it in different ways. But Diversified Gas and Oil, which is in the North America, which you've got there, brilliant management, completely new model. They're just literally they've got their own finance. They've got people who've come in with them to finance. They're buying a whole load of stripper wells and production, which is has been sold over the last 2 or 3 years as people try to get out of the business over there. And they have huge margins, and they're able to continue to finance very strong dividends and strong growth. And we're talking about a yield of something over 10% here. And I expect that, including with capital growth to come, I can think you could see, a return of 25% on these shares with a bit of capital growth and a decent amount of dividend. And it's a very well managed company.
It's interesting, isn't it, how some of these dividends are quite large. The second one on the list is Genel. I see in your notes on melkisblog.com, the bucket list, you've got here a 9% yield for Genel.
Yeah, and Genel have been doing extremely well. They, they managed to sort out the ups and downs of working in Kurdistan, because they've got some of the, these fields are some of the most profitable fields in the world. Torquay is a fantastic province, and but they've gone on to do really good things, because they are doing the things they need to do, like taking the gas away. Rather than flaring the gas, they're moving the gas away to other parts of the the project and re-injecting it. They get, they're getting payments from the KRG. People worried that they wouldn't be paid by the government. There are some back payments still to come, but that kicks in when the oil price gets to 55. So it is in negotiation right now. As I say, because they got such strong production and at these prices, cash flows off this company very well. They continue to buy things. So they bought into Sarta, which was a Chevron operation a couple of years ago, and that's just started. I saw yesterday they started production there in December, and they had their first check from the government yesterday. And they've got 2 or 3 things on the go as well. Very high quality management, and they're paying out a very decent dividend as part of what they consider to be an overall high quality funding process. And as you say, they're yielding 9%.
Yeah, Wentworth, another one, another big yielder. But yield, of course, goes up as the share price goes down. This is an interesting one here. We've got Wentworth Resources, share price goes down. I guess that's part of the reason why it's paying an 8% yield. Yeah,
I mean, the thing about Wentworth is it should have gone up dramatically back in April and May, because ironically their investment in Tanzania, which is continuing to do very well. It's seasonal in the sense that it does better when there's no hydroelectric, so it's extremely high quality play. But their gas price, they are in a long-term fixed gas price, which is linked to the US RPI in New York. So, when the oil price came down, their revenue didn't come down at all. So they're in a very strong position. They spent the last year in last year, they beginning of the year, they paid down all their debt for the last time. They've got no receivables due from the government, but they have got from one or two, from one small company. But apart from that, very strong position, probably yielding 7.5%, 8% at the moment. You know that they're going to do something sensible. Management is very good quality, so lots of upside from Wentworth.
Just was one very quick comment, if we can, on San Leon, another Nigerian company, actually.
I think you have to look at San Leon in its own right, because historically people weren't sure about it because it had onshore Poland and various things. And it's got a model which is completely different from anything else in Nigeria, in the sense that there are a number of fields which haven't been developed or are waiting for funding for development. And because they are cashed up, they have in the process of doing 2 or 3. They lend the money to the company. They take a substantial interest rate, and they get a percentage stake, 10, 15, maybe 20% stake in the company. The company then spends that money on bringing up production, and as soon as production kicks in, San Leon get an immediate dividend. Now, last year in May, when that dividend came in, and they are committed to passing on between, say 75% of that dividend, of the payment to dividend, they paid an amount to shareholders which was an indicated 22% yield. And they said they'll do it again if it happens this year, and I don't see any reason why it won't.
No, indeed. Obviously, it comes with risk as well.
It's a different ball game altogether.
Let me just press you, if I can, very quickly on our last chart. We've got 5 more stocks. If you could quickly whip through these and talk a little bit about your higher beta stocks and what it is about these you like.
Very easy. I'll run through them in one sentence each, and then you can come back if you want to. Kistos is Andrew Austin's new vehicle on the London market. Andrew Austin was the brains behind Rockrose. It did enormously well, then got taken out last year. To get taken out last year was an incredible performance. Kistos will do the same again. Longboat is the team from Faro, who also did very well, and they sold out the year before, and they are also looking for acquisition of acreage and so on in the North Sea, and in particular in Norway. Run high quality team there. Helga and team are very, very good. Zephyr Energy is a new boy on the block. It used to be called Rose Petroleum. They've taken over the acreage in the Paradox Basin and have already announced that they've started drilling with government funding. If you had a chart on that, you'll see did nothing. It's gone up very quickly from absolutely nothing. This thing had a market cap of £1.5 million. I can see this being a 10-bagger easily. And Eco Atlantic, which was the golden stock 18 months ago, has just been held back by the fact that Tullow have made such a mess of their business that, of course, they are the partner with Eco and Total in the block in Guyana. They will drill that well at some stage, probably later this year. Tullow can't afford to do it at the moment. Before long, Tullow will eventually either bring some money up and drill it, which I don't think they've got because they've got too much debt to pay off, but they will either farm out to Total, or they'll have a farm out process for the Guyana block, which will include drilling a well at the end of this year, beginning next year. So it's on hold at the moment, but Eco has got masses and masses of upside when that button is pressed.
Okay, that's a quick wrap of the stocks in your bucket list. Just want to ask one final question and bring up a chart of Brent. You described what had happened, and of course we know about the big declines that we saw last year. We've made around about a 50-60% retracement from the lows. What are the risks do you see in 2021 to the oil price and thereafter, of course, to those stocks on the bucket list? What do you think is the big issue we've got to get over and avoid?
Well, there are two risks. One is that is clearly the pandemic. I'm going on my more bullish tack. I have been for 3 or 4 months because I can see the vaccine working and therefore demand across the world. US, I started in China already. It will happen in the US. It will happen around the rest of the world, probably slowly in Europe. But so I can see demand picking up. So, that's where that's going to happen. If we have bigger variants, vaccines don't work, or we run 6 months behind that, then that's your biggest problem. The second biggest problem is that at the moment, the price is being held up until that demand kicks in. That price is being held up by the Saudis. I've always taken the view that the Saudis will effectively look after this market. Never has it been more true than at the last OPEC meeting on the 4th of January, when all the others were sort of bickering about having slightly bigger tranches of the overall quota. Saudi Arabia just said, okay, you guys can have all those. We're going to cut the oil price, but we'll cut our production by 1 million barrels a day through February and March, and we'll see what happens then. I think that at least for the time being, the Saudis will ensure that the oil price and therefore the supply is restricted and the oil price stays high. But your second potential problem is that if that doesn't happen, we have further market share wars and the oil price comes down.
Look, it's a pleasure. Malky, thanks indeed for joining us. Interesting list of stocks to watch out for this year. Doubtless we'll be back in touch with you later on with an update. That's Malcolm Graham Wood from malkysblog.com. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.